But it seems like the key thing that's turning around is that the Fed is going into an easing cycle. It's hard to deny. Do you think that's the reason for what we're seeing now? Gold at a 6-year high.
Albert, that's the only reason I see at this point, because like you said, the metrics have been there for quite some time. And so your point is very well taken there. I think it's basically the catalyst.
From the NXT studio in Southern California, this is the Power and Market Report. I'm your host, Albert Liu. I'm joined now by Michael S. Fulp. He is a certified professional geologist with 35 years of experience in the exploration of economic resource deposits. Mickey publishes the Mercenary Geologist e-letter, and he joins us today for the first time. Thank you for joining me on the Power and Market Report. Mickey, how are you?
I'm well. Thanks for the opportunity. I am reveling still in the Stanley Cup win by my St. Louis Blues.
Yeah, and I knew you were going to mention that.
Back to the office this week and trying to catch up.
Yeah, that was quite a while ago, Mickey. You're still celebrating. So I don't expect everyone watching this video or on this channel to care about the Stanley Cup, but what they should care about is whether or not you're done celebrating or not, because we want you in a decent state of mind, an objective and sober state of mind to answer the questions I'm going to ask you. So are you indeed done celebrating at this point?
I am done. I returned to New Mexico to the farm on Sunday, and now I'm just trying to put my business back together after being gone 3 weeks.
Okay, so tell us about the Mercenary Geologist. When I saw this name that you go by, it's your website, but it's sort of the name that you go by. Got the impression that you're not opposed to making money, for one thing. So you're definitely on the economic side of economic geologists. Is that true?
Well, that's very true. I'm very proudful of the fact that I am an economic geologist, and I emphasize that term. Too many geologists are not. I'm a mercenary. I've been a mercenary my whole career. Had a mining company job, got a regular paycheck for 6 years in the early part of my career, and now I've been out on my own for well over 30 years. And mercenary, as you know, is someone for hire, and I'm for hire.
So who pays you now?
I run a sponsor model in my newsletter. So it's a free subscription service, which allows us to have thousands of subscribers, somewhere around 7,000 now. And so companies I cover pay to sponsor my website. Now, that said, I am intimately involved with those companies as a major shareholder, and they're kind of the best of the best. So the ones I put out for my subscribers, which are mainly retail lay investors, are generally what I think are the no-brainers. And we run a model of double in 12 months or less, and you take your take all your money off the table by selling half the stock and go and do it again. We call it the power of two trading methodology.
I think that's a very prudent way to approach a market like this, don't you think? I mean, you must agree you do it because it's so volatile. Right? I mean, you can be up and then you can be down big in very short order.
This is true. Yeah. Sorry to interrupt. Go ahead.
No, I'm here to hear you.
Oh, okay. So I've been in this game since 1992. Before that, I was mainly consultant to major mining companies, but I got my break with doing a finder's fee, and I got involved with the Vancouver Stock Exchange, and my original broker at Haywood, Murray McInnes, taught me that philosophy, and I've really followed it ever since. It keeps you from being greedy. It makes you sell. It keeps you from looking at any of these stocks from a buy and hold philosophy, which we know does not work, and because 95% of these companies eventually fail. So you try to get in early. We're contrarians. We try to find stories that are unloved, unknown, unwanted, and undervalued. We buy those and we look to take profits within a year or so.
That's how you deal with exits on the positive side. How do you deal with losses? How do you...
Yeah, so not all of them are winners, especially in bear markets. So generally what I do if stocks don't perform, I'll sell them fairly early on and take a small loss. But if I occasionally, if I'm making good money in the market, I kind of sometimes never give up on these things. And sometimes you get pleasantly surprised 4 or 5 years down the road. So I always have a few stocks that I can sell during tax loss season and wipe out wipe out a portion of my profits on the year. So a lot of them I just if they've gone south and they've rolled back, and I wait until I need a tax loss to reduce my tax burden from capital gains at the end of the year.
In terms of sticking with a company that's sort of high conviction trading, what do you have to see?
Well, yeah, that's a really good question. I'm glad you brought that up, because that's really a key portion of what I do. So we're looking for 4 metrics. We want a tight share structure where management has skin in the game. We want that management to be technical in nature, either geologists or engineers, and a history of success in a business. So if you call yourself a venture capital and you roll back or bankrupted 3 companies, that doesn't qualify anymore. So that's the share structure part. Then and the people part. So you want insiders with plenty of skin in the game. You want a good retail base so you have a liquidity. For me, being a geologist, the key metric is the project. And generally, I'm looking for advanced explorers that are have made a discovery or near a resource stage, because that's where you kind of get leverage in the business. I'm very adverse to geopolitical risks based on past experience in the late 20-aughts and the early 2010s. So I'm increasingly focused on the Americas, and that would go all the way from the tip of Chile to the Arctic Circle of Alaska. And finally, especially in bear markets, you want companies that have cash on hand or the ability to raise financing, equity financing, without severe dilution, or build working capital one way or the other without severe dilution.
Mickey, you're a technical guy. I'm a technical
Yep.
guy of a different sort, so I don't claim to understand these businesses the way you do. But I think we probably look at certain things the same way. And when you mentioned technical management team, I sort of know where you're coming from. However, how important do you think it is to have a CEO that is technically inclined? I've had debates about this with colleagues of mine. It seems like that's maybe a different a different job that requires different skills. Where do you come out on this? Do you want a geo in that position, or someone technical?
Well, it depends very much on the geo. So number one, you want economic geo. You want someone that's done it before and had success. A few years ago, I wrote a piece called "The Trouble with Geologists." I kind of revived that and did the speaking circuit about that last fall. But the trouble with geologists is too many of them are not economic geologists, and they don't understand the business, the venture capital business. So just any geologist or just any engineer will not do, but specific people with those skills, and there's plenty of those out there.
Yeah, that's. I came down. I basically concluded the same thing, Mickey. Let's pivot to the gold market, because the gold market is coming back after several years, 5 or 6 years going nowhere. It seems like it's started to come back now. And the interesting thing is, if you look at the reasons why people think it's coming back, many of those have been in place for a while. But it seems like the key thing that's turning around is that the Fed is going into an easing cycle. It's hard to deny. Do you think that's the reason for what we're seeing now?
No, Albert, that's the only reason I see at this point, because like you said, the metrics have been there for quite some time, and the lowering of interest rates, I think, or another bout of quantitative easing, which is really what set the market off. If you remember, in 2009, after we started to recover from the global economic crisis, what led us out of that were a strong U.S. dollar and a strong gold price at the same time. which is quite rare. Usually they operate with inverse correlation. So your point is very well taken there. I think it's basically the catalyst. The market was ready for it, let's say, and sometimes it just takes a little nudge one way or the other. Let's hope it has staying power. Now, I will caution that this is the summer doldrums, and it usually is the weakest time of the year for gold prices. I usually, I'm a hoarder of physical gold in my physical possession. And I generally buy gold on the dips during the summer doldrums. It doesn't look like we're headed that way. We're going to come out with, in our weekly notice to subscribers, and I encourage everybody to sign up. Hell, it's free. You can't beat it when it's free. If you don't like it, you can unsubscribe. We're going to have a little chart on Sunday that's going to show from year 2000, at least. The only year that looks similar to what's going on right now is 2016. And if you remember, 3 years ago, that's where we had the false start when gold started going up in the summer, and it kind of got cratered back by the early fall. Let's hope it has staying power this time.
Yeah, sometimes hope is all you can depend on, because you're at the mercy of the Fed. Right?
Well, and your mercy of the banksters. We all know that markets are manipulated, and the gold market's manipulated. I have all the respect in the world for the GATA guys. They're my friends, but I also would say, hey, we know the market's manipulated. Get over it and find a way to make money in the paradigm you're given, because we're just little guys. I mean, we may all be part of the 1%. And that basically in the U.S. right now means you're worth $1 million. You're a qualified investor, means you're part of the 1%. But we're a very small portion. Your boss Rick may qualify as someone up there, but I'm certainly of the lower 1% and have no ability, no influence on the markets.
Yeah, and I think the language you choose to use says more about, I think, you than it does about the market. Like you said, we know that governments are active in these markets. We know that central banks are active in these markets. Whether you call it manipulation or not, I don't know. They play in the markets. They do. Yeah. At the same time, I'm not going to deny that factor exists. You got to watch out. You definitely got to watch out because it's not. You can't proceed as if it is a truly free market. Let's move on.
As libertarians, we can agree, Albert, that we are far from free markets.
Right. It's just it's part of the game.
Yeah.
Let's move on from gold to two commodities that seem to be trading similarly. That's copper and crude oil. Let's start with copper first. It looked like it was on its way to recovery, but then maybe the all the talk of trade tariffs and the trade war with China has really thrown a wrench in that curve. So now it's pulled back. What do you see for copper going forward the rest of the year?
Well, it's actually had a little rally along with gold. So right now I'm looking at my KCAS chart, and it closed the day at 271. It was down about to 262 a week or 10 days ago. So it's come up with respect to gold, but it's way too low right now. Supply-demand fundamentals of copper are absolutely compelling. I've written about that recently in a piece called Copper Continues to teeter on the daughter, or something to that effect. We need a price of $3.30 copper. We have a shortage, a severe shortage coming. We do not have a project pipeline that will replace as demand keeps increasing, and demand has increased 3 to 4% a year annually, year over year since 1900. So I'm very bullish on copper. It's what makes the world run. Copper and steel, iron ore and which goes into steel. Now, one of the things that's encouraging about copper is China's going on a big stimulus package infrastructure build out. So the price of iron ore went above $100 a couple of weeks ago for the first time in 5 years. So what follows after they put that structural steel up is they got to finish the buildings and the infrastructure, and that requires electricity, and that requires requires copper. So very bullish in copper, perhaps not in the short term, but the mid to long term. Oil is very geopolitically risky right now, although we're now looking today at an oil price of nearly $59. It was down to $52 before everything started to percolate a little bit. And that's really been driven, I think, by the political, geopolitical dialogue, or the shots from the bow, whatever you want to call it, between the U.S. and Iran right now. Now, I'm very encouraged by the oil business. We are now the largest oil producer in the world by far. We are very near, certainly by 2021, 2022, given the current paradigm and being self-sufficient in energy. Our imports are down to about 7 million barrels a day in oil. We're exporting close to 3 million, and yet in natural gas, where we are a net exporter, it all looks good for the oil patch at this point.
Oh, okay. So prices as of June 25th today, Mickey. Let's talk about uranium before we conclude. A lot of people are hot on uranium. Where do you stand?
I'm hot on uranium, but I'm not hot at this particular time. I'm waiting for the Section 232 administrative actions to come down. We've gotten some hints. That's going to include some tariffs and quotas. Uranium is been trading around $25 a pound for the last few months. U.S. producers need about $45 a pound to start up their ISR projects again. The world needs 65-pound uranium for big conventional uranium mines to start up again. There's plenty of uranium in the world, but the problem is it's all come off with supply, not only supply disruption, but really supply destruction. And so in the mid to longer term, still building 60 more nuclear reactors under construction. That number does not seem to change much and hasn't for the last 7 or 8 years. So longer term, I'm very bullish on uranium.
Thank you. For the people who aren't familiar with the administrative action that is being considered, which essentially involves tariffs on foreign uranium, can you just enlighten them, bring them up to speed?
Yeah, so there's a regulation, I suppose is what it's called, a Section 232 regulation of federal government. And it basically, the Department of Commerce studies a particular commodity and can declare it a commodity of national concern and national security. And certainly uranium qualifies for that. We've got, gosh, I don't know how many nuclear submarines and nuclear carriers, and we are 99% dependent on foreign uranium supplies, and about 60% of that comes from unfriendly, corrupt, unstable governments such as Russia, that's the big one, Kazakhstan, Uzbekistan. And so it's not good to be dependent on such a vital commodity. You know, 1 in 5 Americans who turns on a light switch at any time gets their power from nuclear power plants. So it's essential. We've got lots of good uranium deposits in the United States. Governments that subsidize their uranium, such as Kazakhstan and Russia, have cut the prices, and that needs to turn around, and it will turn around with whatever the Trump administration decides to do. But once again, we need the price to increase, not double, but we need a price from $25 to about $45 a pound.
So it seems like the situation hasn't really changed much in the sense that uranium has been strategic for a long time, and the producers of uranium have had this relationship with the U.S. for a long time. What's changed is that some uranium companies, I believe, are lobbying for this. Where does the libertarian in you stand on this issue, Mickey?
Well, Yeah, I wish it was a free market. I wish it was less regulated. Uh, uh, but it is not. And when you have foreign governments subsidizing their uranium industries and cutting our production, in 1980, we were a net exporter of uranium in the world. Now, for our 55 million pounds that we use every year, we're going to produce not quite 1 million pounds this year. So, from that point of view, Albert, I guess I got to throw the libertarian portion of my basic philosophy, let it go and say, in the interest. Now, I'm a libertarian, but I'm also a very strong patriot, good old patriotic American. So I stand up for my country and wave the flag when it's necessary.
Mickey, you're going to be with me in Vancouver, July 30th to August 2nd. What are you going to be talking about with the folks there?
I'm going to be talking about America's mineral independence or our dependence and possible solutions. Trump administration doing a lot of stuff right now. So my entire talk is going to document, or 20-minute talk, whatever it is, document how many minerals we are dependent on. Something like 64 of 77 essential mineral commodities. We import at least 25%, and we import a lot from China. I think 31 commodities mainly sourced from China, another 12, including some big ones from Russia, South Africa, 6 or 7. So we need to wean ourselves from those, and we're going to propose some solutions to be able to do that. Albert, we did that in a period of less than a decade in the oil patch. The mineral industry is a little different, but if we can do it in the oil patch, and we did that with good old Yankee ingenuity and technological advances, I'm convinced if we did it in the oil patch, or well on our way to becoming energy independent, we can do it in minerals too.
Yeah, it's absolutely incredible what happened in oil. Mickey, this is a conversation that we could also have at Jayant Bhandari's conference. Give a shout out to him, because that's where you and I originally met. It's Capitalism and Morality, jayantbhandari.com. Yeah. I'm looking forward to that conference. I know you love that conference, so let's acknowledge Jayant here.
Absolutely.
Where can people find your newsletter, Mickey?
mercenarygeologist.com. Once again, it's free, so sign up. If you'll get something from me no more than twice a week, and generally just once a week. And the price is right, and as we have already mentioned, Albert, at Mercenary Geo, I'm quite active on Twitter on a variety of subjects, not only economics and libertarianism, and I'm a pacifist too, so and commodities, but things that I enjoy, including outdoors and fishing and hunting and my sports teams. The aforementioned St. Louis Blues Stanley Cup champs for the first time in 52 years, and I'm very proud of that. And we have fun with Twitter, so I think people will be intrigued by our Twitter feed too.
Once again, that's at Mercenary Geo on Twitter. Mickey, thanks for coming on the show. Hope you can come back again. It was really fun.
Thanks a lot, Albert. My pleasure. Look forward to seeing you in Vancouver.